Well, thanks, Stan. Thanks for having us here, everybody. We have full attendance. That's good. That's good. I was looking shaky there for a second. So, I'm still on Seattle time, so we'll keep this as lively as possible. So rather than wait till the end for questions, as things pique your interest, throw up a hand, and we'll spar maybe a little, and that would be fun. So please ask many, many difficult questions of them, okay? And I will moderate it. But to start, why don't we just go down the panel here? We'll start with Havish and go this way and just maybe introduce yourselves and a little bit about your companies, what you're doing, and in maybe 2 sentences, why Bitcoin is the best thing ever and you could never have a blockchain without it. Sorry, Preston, that was a joke. You don't actually have to do that. That would be fun to watch you try.
My name is Avish Bama. I'm the CEO of Mirror. We are a San Francisco-based Bitcoin company, blockchain company, however you want to define it. And we're working on a smart contracts protocol on top of the Bitcoin blockchain that will enable democratized access to financial markets.
My name is Preston Byrne. I'm the COO of Eris Industries, and we build a fully programmable blockchain developer stack, which is designed to make the blockchain work in enterprise. In other words, it's the blockchain without the token. And Bitcoin is awesome because it did all this free open source dev for us.
Hi, my name is Akif Khan. I'm Chief Commercial Officer for Bitnet. We're a merchant processing platform. We're a little bit different to some in the space in that we have a team of about 40 people, and practically all of us, about 35 of us, are ex-Visa. I spent 10 years working at Visa myself, so we come to the Bitcoin space with a lot of e-commerce focused merchant processing payments experience.
Hi, I'm James Smith, the CEO of Elliptic. My co-founders and I have sort of technical PhDs and then sort of background in trading. So coming with that bit of sort of market experience, we looked at the space and saw a real weakness in the infrastructure. And so Elliptic is a custodian of blockchain assets. At the moment, that mainly means Bitcoin, but we are talking to a lot of other people like Eris Industries to figure out what other blockchain assets need custodianship.
Sounds great. That's great. All right, are we ready? Anybody willing to parry yet? No, we got to keep going? Okay, we can do it. That's it. So we'll start with you, Preston, because you kicked this off in an email thread. You said you're skeptical about Bitcoin itself as a viable currency. So can you maybe expand on that position a little bit, and then we'll heat it up here.
I think over the last couple of years, when people have talked about blockchains, it hasn't really been possible to have a blockchain that works unless it's Bitcoin. I mean, Bitcoin is the most secure of all of the altcoins. When you have this decentralized open model, you do need an incentive mechanism, and that, driven by mining. And Bitcoin's been the most successful by a mile in that regard. However, in the sense that in commercial relations, you need to have a substantially higher degree of control and even reversibility. A blockchain is still very useful, but it is useful in a very different way than Bitcoin's is. So, for example, if you're using it for clearing and settlement, it will be useful for that, but it won't be useful because you are transmitting value across borders, and without the U.S. government being able to pay attention to you. So our view is that the world is going to be a world of very many blockchains, many millions of them. So Bitcoin is not, it's a very specific application with very specific design parameters, and it's really good at what it does. But I think when I say I'm a bit skeptical, I'm skeptical that it's going to be able to do everything.
Mm-hmm. Okay, yep, makes sense. Avish, do you have any kind of thoughts on, you picked the blockchain and Bitcoin to build your business on?
Yeah, I mean, the way that we're building the company is we are building a financial services company that leverages blockchain technology, and it just so happens that Bitcoin is the predominant and first major protocol that enables us to do the things that we're trying to accomplish. So, I mean, Preston hits on a really good point, which is that financial institutions are probably going to use blockchain technology at some point, and it may not be the Bitcoin blockchain. It may be something entirely different. It may be completely private. It may be a walled garden approach where banks are adopting a ledger that have a select amount of entrants and participants in it. And that may come, but it also may take years for that to happen. And I've heard many things about Ethereum and other blockchains that are very, very promising. But once again, they may take years to get adopted. One of the biggest advantages of Bitcoin is that it is volatile, despite people thinking that that's a bug, it's a feature. And the reason why it's a feature is because the volatility attracts attention and it attracts education, it forces education of the underlying technology to people that have never heard of it before. And with this comes adoption. And over time, what's going to happen is, Bitcoin will be innovated on, and it may improve. I mean, there's lots of different smart people in the space working on very, very interesting things. But other people are going to come out with new blockchains and new technical protocols that can do very interesting and compelling things. So I tend to agree with Preston that there will be more than just one blockchain, but it's very, very early as well.
Right.
Yeah.
Akif, you've two things. One, you've also chosen to build your business, on accepting Bitcoins, not the blockchain, but Bitcoins as a currency. So I wonder how you kind of think about this, and then also maybe address a little bit about the volatility issue, since that deeply impacts, I'm sure, your merchants.
Yeah, I guess, from my perspective, coming from having worked at Visa and working for a number of years with large e-commerce merchants, helping them take payments online, myself and my colleagues who are now at Bitnet, I guess what we saw in Bitcoin and the blockchain was a way to address some of the pain points in that specific segment of the financial ecosystem, which was namely making online payments. Clearly, there's things such as the lower processing costs compared to some of the earlier panelists were talking about interchange rates. That's not so relevant within the EU, where interchange has really been driven down, but certainly when it comes to cross-border transactions, particularly going into the US from other regions, there are definitely price advantages for merchants accepting Bitcoin. My specialism actually at Visa was actually fighting credit card fraud online, and clearly with a non-repudiation, non-chargeback model of Bitcoin, that's favorable to merchants as well. So there are those elements I think make Bitcoin interesting from a merchant processing perspective, which is why we kind of chose to build our business in that area. The flip side of that coin, though, is obviously why would a consumer pay with Bitcoin online? And that I think is still an evolving space. I think there's still a lot that needs to be done in the consumer-facing side of a Bitcoin ecosystem to make it easier for merchants to use Bitcoin to simply make peer-to-peer transfers, or even simply to buy stuff online. I think people like Circle.com and others have made a good start, but I think there's still a lot of work that needs to be done there. I think the real potential that we see, and we're looking at our business globally rather than just simply looking at e-com merchants, say in the UK or the US, is really in the emerging markets. I've heard, it was interesting just during some of the networking sessions, I heard just a couple of kind of sidebar conversations where I got the feeling from a few people that, given the people in the room today, the whole topic of Bitcoin in an online e-commerce environment was seen as a not a particularly glamorous part of the Bitcoin ecosystem, and not as interesting as figuring out how to reinvent the entire financial architecture we're all used to. But my view on that is there are millions, billions of people in the world who can't do what we take for granted, which is just ordering something online. And I think there's lots of potential in those markets, particularly in countries like Argentina and Indonesia, where schemes are popping up now where you can convert mobile phone credit into Bitcoin, or you buy Bitcoin of cash over the counter to really empower people to do what we all take for granted, which is simply shopping online. Sorry, just to finish off, the volatility aspect, again, is much more of a challenge on the consumer side at the moment. On the merchant side, merchant processors like us at Bitnet and others have kind of solved for that in the way that we, run our businesses, and that we guarantee to merchants that they'll receive their sales price. So if they're selling an item for, say, £100 online, and a consumer pays £100 worth of Bitcoin, whatever happens to the volatility, we're hedging against that, taking the risk, and we'll guarantee to the merchant that they'll be funded £100 into their bank account. So I think from a merchant's perspective, processors like Bitnet and others in the space have kind of removed volatility as a problem. I think that still needs to be elegantly solved on the consumer side, so that more consumers are comfortable storing value in Bitcoin. And again, particularly in the emerging markets where they don't have alternative ways to store value.
Great, thanks. James, you've kind of, sounds like, taken an agnostic approach to all these different technologies. So Given that you're maybe in a more neutral seat in all this, what's your take on this?
Yeah, we have. I mean, we see a future with lots of different blockchains. We think that there's a potential for things like Bitcoin to do well in some spaces. I personally don't think it's going to become something you pay for coffee with, but maybe an equivalent that represents pounds will. But we think there'll be a lot of blockchains in sort of closed environments, like Preston mentioned earlier. We're trying to focus on the areas that we think apply to any blockchain, such as safekeeping, on settlement, and on sort of tracking and coming out of that anti-money laundering. How do you make sure that the right things are going on? So these are the areas we're focusing on for products, because we think they'll apply to a lot of different blockchains. The reality is, at the moment, Bitcoin is the one that's used the most. So our customers at the moment are using Bitcoin. I think, as Avish said, one of the great things about Bitcoin is how controversial it is and how volatile it is, because you wouldn't fill a room with this many people if it weren't controversial. So that's been great for it, for publicity, for drawing people to it. And the other thing that's great about it is, as Aki said, the fact that it brings things to other parts of the world that we do take for granted here. A lot of the development in Bitcoin and blockchain is happening in the Western world, and it's sort of working on problems that are Western world problems. But there are lots of simple problems that need to be solved for people who don't even have a bank account at the moment, and Bitcoin is perhaps more relevant there.
Interesting. So how many people here in the room have some Bitcoin by hands?
Wow,
This is good. So we can go deep now, right? That's good. And we also have a count on who needs to buy Bitcoin from us. That's also good. So that's great. Awesome.
Are you selling?
How many in here, just by show of hands, think that they have a positive impression of Bitcoin, the image of Bitcoin, the brand? How many have a negative impression? Okay. So maybe it's true, you guys. Yeah, like the notoriety has helped get attention and hasn't harmed it too much, maybe. That's nice, right? Do you feel like some of the notoriety around Bitcoin is damaging to the brand? And
I don't. I mean, there are lots of different parallels comparing Bitcoin as the first open financial network that nobody owns and everyone can use, and comparing that network to the internet, which was the first open network that nobody owned and everyone can use. And there's something very powerful about that. And there have been lots of different, pieces that have come out of people saying, well, Bitcoin is used by criminals and its volatility is a problem, like I touched on earlier. The reason why it's volatile, I mean, to be very honest, is because it doesn't have a very great use case right now. So right now, what's happening is people are speculating with it. They're speculating on it. They're betting on the price going up or down. But things like remittances are going to take time to develop. It's going to take time to develop that ecosystem. And so you have merchant services companies like Bitnet and BitPay and Coinbase that are constantly having to sell Bitcoin on the open market to hedge their FX risk. And you have mining companies that need to sell Bitcoin, and it serves as a forcing function to hedge their operating margin. But there is no forcing function on the buy side, right? So once again, if there was a real use case for Bitcoin right now, it would force new market participants to adopt the underlying currency and to leverage the technology in a new and interesting way. That's not happening yet, and I think that's going to happen. And what's happening right now is you have a lot of really, really smart people that are entering this space because it's the first open financial network that nobody owns and everyone can use. So it's attracting venture capital. It's attracting businesses to be built on the open network rather than the closed networks, and then it's going to attract I think, the largest amount of human capital in the world. So you have the smartest people in the world going and building on top of the Bitcoin blockchain, or in this space. And I think these problems will get solved over time. So yeah.
Okay, great. Well, Preston, you raised your hand.
Yes.
That you felt that there were negative effects from the reputation. So.
Certainly negative perception. I mean, I'm a Bitcoin guy just as much as everybody else, and so is everyone at the company. We love it dearly and are very fond of it. But we identified certain problems with it. If your 2-year-old wires your life savings to Japan on your iPad from your Bitcoin wallet, you're never seeing them again. If your computer crashes or gets eaten by a pack of hungry marmots, that's it. It's gone. There are significant weaknesses in terms of the real-world applications of how we manage data. If you have an account balance with RBS, their computers went down, you couldn't access your balance. They booted them back up. That didn't change anything about the fact that you still had a balance at RBS. With Bitcoin, the database is the asset. But that's not the way that most of the world works. It works on the basis of obligations, performance, with people delivering things. So the approach that we take to blockchains more generally, I mean, the first application we did had nothing to do with finance. It's a YouTube on a blockchain. What use is that? Well, if people want to set up an infrastructure-free network to trade data with each other and not have to retain a web server, they can now do it using other distributed protocols, including Bitcoin, which we've actually incorporated a tipping function. So our view is that the blockchain is a very low-cost infrastructure solution. For those who want Bitcoin and want to pay for the security and need it, perfect. But for other applications where this needs to be tailored, you can't run the risk that you push the wrong button and all this. I've had wires intercepted going across the Atlantic because, oh shit, I put in the wrong bank details. You call up your bank, they call up someone else, it gets sent back to you. This is something which happens. So for the real world, you need a little bit more flex and you need a little bit more control. And the blockchain is a really good way of sending data verifiably across great distances, to other people. And that's the view that we take.
Great. Okay, if you kind of deal with this, how do you see, and I think Avish made a good point about the sell-side pressure and the lack of the buy-side incentives and the killer use case, and Preston, you touched on the killer use case too, and maybe there isn't, or what is it, right? How do you see this? How do you get Bitcoin into people's hands so that they can spend it at your merchants?
Yeah, I mean looking at it more broadly, our business specifically is not dealing with consumers. So, we don't have any specific business activity that's related to encouraging consumer adoption. I guess, our sole reason for being right now is making sure merchants can accept Bitcoin if they want to accept Bitcoin. And, in its own small way, consumers simply seeing a buy Bitcoin button on the payment pages of big merchants they go to will help obviously raise that consumer awareness. So I don't have a magic answer on a consumer adoption piece. And as I say, I think in the Western developed markets, and this is speaking as someone who's been at Visa for 10 years, it's still trivially easy for you just to get your credit card out of your pocket, and I don't think that's really going to be replaced anytime soon. But, to the point I made earlier, and James echoed as well, there are more compelling use cases in the emerging markets, I think, on the consumer adoption piece. Just one on the kind of buy and sell side pressures. Yeah, absolutely right. I mean, right now, our business model revolves around merchant requirements, which is merchants want to get a payment in Bitcoin but then be funded in fiat currency. I think for the ecosystem to be viable in the long term, we will need to start funding merchants in Bitcoin. And we have the capability to do that today, but we don't have any requirements from merchants for that. But ultimately, I think once potentially volatility is no longer seen as a huge concern for merchants, or once merchants have a way to better hedge the risk on any Bitcoin they have, once we start seeing requirements in the marketplace for us to fund merchants in Bitcoin, then I think that will kind of lead to a major step change in what's happening, because then merchants will potentially pay suppliers in Bitcoin, there'll be more companies potentially paying employees in Bitcoin, and then we can start to see it kind of get round in the ecosystem. But today, that's an absolutely valid point. We're selling the Bitcoin as soon as we get it because we need to fund the merchants in dollars, pounds, or euros, and that does then increase the pressure in the market to, or kind of reduce the pressure in the market with respect to the amount of Bitcoin that's available for people to buy. So, the other point I wanted to come back onto, just with respect to the reputational side of things. That's just something we encounter every day. I mean, we're speaking to large blue chip merchants. We're focused on the enterprise space. I can understand in terms of visibility within the ecosystem, getting attendance at events like this, notoriety can be a good thing. When you're sitting in front of a major national airline and you're trying to get them to accept Bitcoin, notoriety is not a good thing at all. People have concerns about their brand. There are so many stakeholders who have heard a little bit about Bitcoin, a little bit of knowledge is dangerous, and you're trying to speak to a dozen different stakeholders within a large blue chip company, many of whom are concerned that there'll be money laundering implications for them, even though they're never going to touch the Bitcoin, whether it's legal for them to accept Bitcoin, will consumers be put off if they see a Bitcoin buy button? So, the notoriety piece cuts both ways, I think. And I think in a sales conversation with a conservative blue chip merchant, it doesn't really help.
So James, you do a lot around security, and a lot of the reputation harm for Bitcoin has come from, insecure practices, people losing Bitcoin, Bitcoin's being hacked. Preston, you mentioned this, right? So how do you kind of view that? How do you view those solutions evolving, and are they going to get to a place where some of Preston's concerns are allayed, that we can develop some UX layers on top of the Bitcoin protocol to make it more consumer friendly, or is it just one of those things that?
When you get news about someone being hacked, that does affect the ecosystem. I'm not sure about that, how negatively it affects it. I mean, it affects our business positively because people move to the more secure solutions.
Fear sells. Nothing sells like fear. That's true.
Exactly.
Ask the lawyers. We know that.
Sadly, yes.
Our customers are, or our largest customers are funds. So they're just sort of holding it long term, speculating on the price going up, and they would like it to keep going up, obviously. So other kinds of negative press are not great for our customers at the moment. They're great for getting people to hear about it, but I think we would all prefer it to be news that's positive and it's growing and more people want to get in. The sort of security side of it, as I sort of said earlier, I don't really see Bitcoin becoming something that retail customers use a lot, or at least they don't know they're using it. I think we're a B2B company. We're building a secure solution for other companies that need to handle Bitcoin. It's those companies' responsibilities to build their businesses using Bitcoin, but the interface that's presented to a customer needs to be as secure and as simple as any other web service they're using, any other banking service they're using. I don't think that they're likely to be focusing on the Bitcoin itself as a retail customer.
So I hear this a lot. Okay, if I'll come back to you on this.
Mm-hmm.
If maybe one way Bitcoin succeeds is that it kind of disappears beneath kind of the application stack, right? That you're using Bitcoin, you're paying for things in Bitcoin, but you didn't even really know. It's just the rails underneath. Your business today is based on people actually transacting in Bitcoin. Do you have plans for that kind of future?
You're quite right when you say our business today is based on that.
Right.
In this kind of, in the ecosystem as it exists today, in the environment, our business could probably look very different in a year's time, depending on, whether we need to pivot and how the, ecosystem evolves. I think, those points are valid as well. Right now, yes, the business is built around people using Bitcoin to pay, and it's a reasonable proposition for the market as it stands today with the interest in Bitcoin. But I think probably to get to major consumer adoption, I agree completely. I think the more consumers who are able to use products where they don't realize Bitcoin is actually the underlying mechanism by which funds are being transferred, is probably going to increase the volume that's going over the Bitcoin network. I guess one thing that I find interesting is people often say Bitcoin's complicated and consumers don't understand how Bitcoin works. And I've heard a few people say before, people understand credit cards, but they don't understand Bitcoin. And my kind of response to that often is, if you stopped 100 people in the street and said, explain to me how your credit card payment works, I'm sure most of them would have no idea about acquiring banks, issuing banks, interchange, ISO messages, APAC standards, and all the stuff that makes their credit card payment works. And so, again, I think the ecosystem needs to do a better job of explaining Bitcoin in a way that, again, abstracts away the complexity. An average consumer, and we're guilty of this as well. We'll go to speak to merchants, and before you know it, you're immersed in an hour-long conversation about the blockchain. And you're just thinking, does this merchant really need to know how the blockchain works to accept Bitcoin? No, they don't. So it's still up. It's much like in the early days of the internet, where lots of conversations were taking place around what the internet was and how it worked. And today, no one. Again, you stop 100 people in the street, they're not going to explain to you how the internet works. They just know that their applications work. So again, we're still in that early stage where I think people are going at length to explain the detail of something which the average person in the street probably doesn't need to know.
Yeah. So for me, when I look at the ecosystem, one of the killer use cases that I'm waiting for eagerly to see is anywhere where you're embedding transactions into data, right? Essentially the Uberification of payments, right? The idea that you've taken all the friction out of payments and you kind of walk around and you're paying for things and you don't even realize it, which is certainly something that you can do with Bitcoin that you probably couldn't do very well with traditional payment rails. When you think about that, you're thinking smart payments, you start thinking about smart contracts, right? And so, in fact, smart contracts, from my perspective, is kind of not a real word. It's really smart payments for dumb contracts, right? Really complicated contracts can't be devolved into the payment flow. But obviously, that's a lot of, I think, what you're working on essentially is embedding transactions and payments into data flows with your smart contracts, right?
Yeah, and just to emphasize, we are building smart contracts on the Bitcoin blockchain, and kind of to touch on the last point, the Bitcoin network is, the core invention of the network is incredibly secure. It has a $4 billion bounty on it, which people tend to forget. The headlines that make the press are typically geared towards social engineering attacks or people losing their private keys or exchanges that operate with some sort of malice. But regarding smart contracts, I mean, that is kind of a buzzword in the space. And really what a contract is it's leveraging the protocol to do three things. It's an agreement that enables an escrow of funds that makes value transfer much more distributed by nature, and that automates settlement on a publicly accessible ledger. That's all it does. So escrow, automated settlement, and decentralized, making it counterparty risk-free. And I mean, right now the space is incredibly early on, but the core invention of a smart contract, it was actually first written about by a guy named Nick Szabo 20 years ago. So this isn't a new idea. It's simply now possible using these protocols that have come out and that are getting adopted. So what we're building are contracts around the financial ecosystem that enable an escrow of funds in the financial ecosystem. We're targeting cross-border trade settlements and that automate the settlement, that enable decentralized trade to occur. And it's a hard problem, and we're pretty early on in it. But there are going to be smart contracts for many things using the Bitcoin protocol and other protocols, machine-to-machine, mesh networks, to name a few. We're starting with the lowest hanging fruit.
Got it. Now, Preston, I know you do some work on smart contracts over at Eris as well. I wonder what your kind of take on this whole thing is.
I suppose we're a little bit lower down the stack in the sense that you can have a contract which deals with value on the Bitcoin network. But the underlying principle of the thing is that it is code. It is nothing but code, and it is code which is cryptographically verifiable in its execution over a cryptographically verifiable set of data. Execution being what happens when you send it an instruction signed with your private key, and the cryptographic data being the transaction history, the blockchain to which that relates. So in a sense, a like button on Facebook, that's a smart contract. Pressing play on a YouTube video, that's a smart contract. Any function where you have a permission, and then when you submit a request to the blockchain, it will check that you have that permission and then either allow you to do so, the transaction validates, or prevent you from doing so, i.e. you can't press a like button twice. You can't double spend a like button. So the perspective we take is very different from that of, of finance. You can work your way up and add complexity to describe something financial. But ultimately, it is just, I have a private key, I have accessed this blockchain network from somewhere, I'm telling it to do something. And when you give it that input, you can predict with very high degree of certainty that it will always lead to a certain output. So that, it's certainly you can abstract your way up to that. The kind of financial applications we're thinking of do not require on the blockchain having standalone value. The blockchain is just a data store. It's a tool which is being used by the person who is operating it. They can make as many as they want, and they say, right, I make the blockchain, it does nothing. It just sits there, it's a blockchain, it's looking at you going, I have no idea what I'm doing. And then you put a bunch of scripts on it, 100,000 lines of code, and then it will do what you want it to do. So that, that's an innovation that was pioneered by the Ethereum project, the idea that you can put a script onto a blockchain, and we sort of just took it one step further, and we just said, make the whole blockchain self-defining in those scripts, so that you can tell it with a very high degree of precision exactly how you want it to behave.
Okay, great. So that's some pretty out there stuff, right? Like when you look at where we are today, like the Bitcoin guy says that, right? So, when you look at where we are today, and you think about, again, I keep coming back to this idea of consumers and consumer level security, right? So when you're talking about, Turing complete scripts and then Turing complete blockchains that you self-evolve, or these types of things. How do you sell security around that, James? Like, how do you take that concept and say to somebody, you should totally use this new thing, and I'll help you, secure your private keys so that nobody steals your life savings. How do you sell that to somebody? How do you make it clear to people?
So I think to start with, you're saying that these things are quite out there. I think to sort of simplify what's going on, smart contracts exist everywhere in the normal financial system. The difference, all a smart contract is some rules about when some ownership of something should transfer. It's just that in the existing system, all of those sort of the people who sort of write the rules and who make sure that they are, the rules are followed, are all independent, sort of trusted organizations, and you have to be trusted for people to come and play by your rules. What we're saying with a smart contract here is that anybody can write one, and you don't really need to trust the person who's writing it because you can see what they've written, and they're not the one enforcing it, the blockchain is enforcing it. So it's the power of everyone in securing the network that is making sure that those rules are followed. So the concept isn't that crazy. I suppose the far out bit is that you don't need to have a big bank to trust in order to do it. You can just write one and stick it in the blockchain, and now we know we're all going to have to play by these rules. So coming on to your actual question, in one sense, we don't feel like we need to force that. We do think it's going to happen. We're really excited about the fact that all sorts of assets will be able to be transferred and sort of moved around using this kind of technology. What's relevant for us is that whichever one of them you're using, you're going to need to protect your ownership of it somehow. And that won't be saying to someone, hand over all ownership to us and we'll protect it for you. But we do think a key custodian is a very essential part in that. I guess we haven't really touched on this yet in this panel, but one of the clever things you can do with blockchains is split up responsibility for an asset, and in Bitcoin it's called multi-signature. So we might be an essential part of authorizing movement of an asset, but we're not enough on our own, and you need to be able to sign it as well, and so does everyone else here. So we wouldn't say to people, come and stick it with us and trust us, because then you're just going back to the same problem you have in existing financial systems. We'd say, use a variety of sensible people and spread your trust among them. We think we're quite good at what we do, but we don't want total responsibility for it. You shouldn't have total responsibility yourself. You should spread it around a few people.
To be honest with you, I don't think anyone's going to even know they're using smart contracts. They're going to be, no one cares what's going on behind the view layer when you log into Twitter. And so this stuff is sufficiently complex that you're not going to have a smart contract app. You'll have an app. It'll do what it does. But it'll be, in terms of the application developer, and you said, who is this for? I don't think smart contracts are for consumers yet. Applications are for consumers. Smart contracts are for developers. Smart contracts are for businesses. Smart contracts are for governments. Smart contracts are for anyone who has the need to securely communicate data somewhere else. Does the average man in the street walk down and go, gee, I really need to securely communicate some data on a distributed network? No. So, Bitcoin is a very different proposition from, I think, where blockchain is going. I think there will be substantial overlap in that once you have distributed systems, it makes sense to have a distributed payment method as well that can be plugged into those systems and add utility. There's a guy here in London named Chris Ellis who's made an app called ProTip. So it's think change tip, except everything has been moved locally onto the user's computer. And it sort of keeps track of the content you're looking at for a given week, and then at the end of that week, it batches it and sends Bitcoin to the content creators. Why is this useful? Because you're not exposed to somebody else's server. You're utilizing the disintermediating qualities of the Bitcoin network. This is, again, it's going to improve or change the profile of data security, and I don't think people are actually going to even know it's there.
So it's interesting. If people don't know it's there, and this kind of comes back to this idea of, if the magic of Bitcoin and the blockchain is that it's a zero trust environment for transactions on a database, and you're introducing these smart contracts, and you say, you don't have to trust anybody because here's the code, look at it for yourself, however complex, but it can get pretty complex. And you're saying it's still zero trust, but don't you have to trust, if you're somebody like me, I can't read that code and understand it. Don't I have to trust the man behind the curtain, essentially? Avish, what are your thoughts on that?
Well, yeah, I mean, I second what Preston just said. That's what the application is for, right?
Yep.
So if you are a developer and you're building a contract and it's in the background, the application, the UX of that is going to be the thing that engages the end user to be able to do something new and interesting that they've never been able to do before. Because of the underlying technology. So, for instance, I bring this up as an example, but people that are in areas where there are capital controls, that Argentina, for instance, that are trying to get exposure into other markets because they want to get out of their local currency. They aren't able to do this by going through a contract where they have to trust their local government. So connecting to an application that enables them to do that in a decentralized fashion is something that's going to be compelling for them. But I don't think that they're going to understand the underlying technology at scale, just like most people don't understand how credit card payments work at scale.
Right.
Yeah.
But I think you can end up having, you won't get the individual to go and audit the code, but you can have bodies that do that. So you might have someone within the FCA who understands what the contract is, and they can check that a regulated business is creating sensible contracts.
Well, even now, though, let's be fair. I mean, we're trusting GitHub's SSL certificate when we download Bitcoin. The only way you can know that the code is if you go over, as one of our developers says, you have to go over to Jeff Garzik house and get it from him. And even then, who knows what Jeff Garzik might have done with the code, while on a USB stick. So there's always, these databases always touch the real world somewhere, whether it's through the database administration on the mining, or the fact that you've got an SSL certificate that you're trusting, or the fact that you're trusting Jeff Garzik himself. So I think that's just something that we acknowledge as a company, and it's just something we plan for.
Okay.
Quick question.
Yeah. So.
Is the Bitcoin price the right price? And what do you think is the right price at the end of the year? Is the Bitcoin price the right price right now? And what do you think is the price at the end of the year?
What do you define as right price?
Well, the market price. Well, so there's a big question. It was 1,200, and then it was 200, and now it's.
Is it priced appropriately?
Yeah. And what do you think is the right price?
I don't know. I don't know. I mean,
It matters
I think
for investors.
it's funny because, well, yeah, but I think that's just one of the use ultimately there's this whole debate. I mean, we always refer as Bitcoin, you know, and we think currency. And so people are starting to say, well, let's talk about blockchain rather than Bitcoin, because there's a lot of, but ultimately it's just an exchange mechanism, right? So we actually attach to it, you know, the currency name. So in one of the previous panels, somebody was talking about hedging, but ultimately, I mean, the whole big idea is beyond the currency.
Oh, I totally agree.
And so I think, you know, it's almost like people that latch on to, you know, referring to it as a currency and looking at all the pitfalls, you know, that it has and all the weaknesses it has. You know, maybe, you know, it's not what really matters in terms of Bitcoin and blockchain.
I agree in terms of theory, but in terms of liquidity, it really matters. 'Cause
That's-
It's billions of dollars.
Yeah, I guess from my perspective, the right price is the sorry to interrupt you.
No, go for it.
I guess from my perspective, the right price is a price that sustains the mining community to actually want to mine Bitcoins. Because it's one thing to say the price is not so important, but if, you know, again, there's that whole separation that people put in place around kind of Bitcoin and the blockchain. But if the price goes too low, people won't mine it, and then your blockchain applications aren't going to work either. So I don't know what the magic number is, but, you know, I guess a flippant answer would be whatever price sustains the miners to be able to actually make sure the blockchain keeps on ticking.
Are you suggesting that the government should set its price? Potentially. I mean, Bitcoin, it is what it is. Its value depends on the perspective you're looking at it. Its price is what the market determines. There is no right price, and there's no way of knowing what the right price is or will be.
I think people up here might know the right price, but they're not going to tell you because they want to make money. So that might be the real answer. More questions? That was good. We finally got some sparks going. But it was all over here on this side. So, yeah, go ahead.
Personally, in terms of this whole debate, you know, I think Bitcoin is very 2009. But if you just look at it, just a point of failure, which I think will be major if you are involved in that stack. Right now, block rewards 25 Bitcoins, mining fees about 0.1 Bitcoin per block. So that means you need to increase, you know, transaction volumes by 250. But the network can't scale that much. And by 2020, most of the Bitcoins will have already been produced. So my question is, can transactions pick up enough in the network and can it scale up for the next 6 years? Otherwise, it's pretty much doomed.
If it's doomed, people will fork and change it.
Okay, so let me take that question and go a little bit too deep and wonky here, but I'm curious what people on the panel think anyways. So how many of you are in favor of a block size increase?
If people need it,
Yeah.
I mean, I think that's part of the answer is a
That
block
is,
size
yeah.
increase.
Yeah.
Yeah.
Another thing I would just say is your assumption is that volume has to increase, but I guess one parameter you kind of regarded as being fixed but doesn't need to be fixed is the transaction fee. You know, volume could stay the same, but again, depending on requirements, needs, the ecosystem, transaction fees could increase as well. So there's kind of a few different moving parts. It's not purely just about the volume.
What's the average size of transaction compared to that transaction fee? Because if most transactions are under £10, let's say, or small payments, do I want to pay 10p, like what for some of these transactions?
Yeah, of course. So again, it depends on the requirements. You know, for a microtransaction, not necessarily, but then, you know, microtransactions is a perennial problem in payments today. I mean, you know, card transactions don't work well for micropayments either. So again, lots of different use cases, but just making the point that transaction fee is another variable there. So.
And it might be that Bitcoin's not the right thing for micropayments.
Yeah.
You have a side chain that is great for micropayments, but you use Bitcoin for large payments, in which case you don't care about a transaction fee.
And as a final point, Bitcoin is not static. It has changed its form many times. There are new versions all the time. If the model doesn't work and there's sufficient incentive to change it, I suspect it will change, you know, with mining incentives. So.
Is the Bitcoin Foundation qualified enough to manage monetary policy? That's quite a big expense to face.
Is the Bitcoin Foundation qualified to regulate monetary policy? The answer, as the most recently former executive director of the Bitcoin Foundation, I can say no.
But that's not their role.
But
That's
it's not our role, and monetary policy in Bitcoin is dictated by the code, right? And the code is based on consensus amongst the development community, the miners who adopt it, and the consumers that use it. So these things that you're talking about, so fees used to be actually more rigid, and now they're more flexible. And you could probably see how pretty clearly down the road the fees will become just whatever they are, and it'll be a total free market on fees. If the politics line up, you could argue the same thing for block size, but that's a very political debate right now. How big should blocks be? But that's one parameter. Then, of course, there's energy and the price of Bitcoin and all those different things. So the monetary policy, and of course the issuance is fixed at 21 million, and that's a line in the sand I don't think anybody's willing to cross. So the monetary policy is set. To change some of those little parameters around it in terms of how much money the miners can make, then that's a matter of consensus amongst the developers, the mining community, and the people, the exchanges, the wallets, and everybody who's using the software. So no, the foundation never did, never should, never got involved in it, never will get involved in it. Not the role of the foundation at all.
Well, I guess just one other aspect to your question, though, I guess trying to get down to the bottom of it in terms of, will volumes increase to sustain, I guess, the ecosystem? I mean, ultimately, many people, myself included, are kind of, our businesses are built upon the fact that we are assuming volumes are going to increase, and hopefully, we're all assuming our bits of the ecosystem and our companies doing good jobs will help that volume increase. And if we're sitting here in 2 or 3 years' time and Bitcoin volume has remained static, then clearly either something has gone wrong or we'll move on to the next exciting thing, I guess. But ultimately, many of us are forecasting, gambling, predicting, praying that the volumes will increase, and ultimately that will need to happen, I think, if the kind of hopes and realizations of people attached to Bitcoin are going to become realized. So
Avish, I want to ask you, because I'm going to draw you into this conversation here.
Sure.
I want it to get political again. No.
Great.
So, you talk about, we mentioned microtransactions as a use case, and I tend to agree that that's a better use case for a sidechain or maybe a payment channel, right? And I mean, is that something you see? I know with some of what you're doing with the smart contracts, you're setting up oracles and things like that. That's not too dissimilar from sidechains and those types of things, yeah?
Yeah, I mean, I don't want to get into exactly how we're doing it just yet. There will be a white paper that's coming out.
We're friends here. No one will tell anybody.
Sure, yeah. There will be. We're going to be publishing a white paper about it at some point in the coming weeks. But yeah, I mean, your question is geared towards microtransactions.
Yeah. How do you solve problems like microtransactions, things like that? If you have an application that doesn't quite exactly fit the blockchain, Preston, you're next. Don't worry, you're coming up on.
No, I'm not.
Yeah, I mean. There are companies in the space that are doing some interesting things around this. There's a project called Lightning Network that is doing something interesting, and there's ChangeTip. I don't know exactly if they're tackling this specific thing or if they're waiting on sidechains. And then there's Blockstream coming out with sidechains at some point. So I don't have an answer for you just yet, but I know people are working on it.
People are working on it. That's great. Yeah. Preston, are you working on this?
What?
Creating alternative sidechains for specialized applications like microtransactions.
Every blockchain is an application.
Yep.
So it's a database and protocol, and the database is the history and the protocol, the rules. So it's not so much that we're working on specific applications, although we are. Really, it's a developer platform for people to make their own applications, which they run themselves and they control themselves, absolutely, quite without regard to anyone else's consent, permission, or knowledge. So yeah, I mean, this is what this stuff is designed to do all kinds of things. I don't think for payments, blockchains are particularly good because they're slow. That simple as that. So microtransactions, again, that might be a good use case if it's a very low intensity network for a sort of small provider designed to challenge a large financial institution. So if they've got a license, but they need to record how all these payments are going around. One example, Hullcoin. I don't know if someone from Hullcoin is here today. I saw them on the list, but Hullcoin is a prime example, or Brixton Pound. That's the kind of thing where you would want to put a permission blockchain in, so you could have a very easy, run it on a Raspberry Pi, low-cost network, which everyone can access in that local area, which keeps capital within the area instead of having it spent out, or incentivizes people to spend in the area instead of spending it outside, so a 5% discount or something like that. So yes, you could do that on what we've built. We know of some people who are building applications on it, nothing related to payments or finance yet. They're all sort of pure utility and tracking data.
Okay, interesting. Yeah, we're all done? All right. Why don't we do closing thoughts? Go this way. Tell them why they should love you.
I think Bitcoin has got a lot of hype in 2013 and 14. It's been in a bit of a lull recently. But what I do think is really positive about it going forward is that conversations around it are much more like this now. They're talking about how the technology can improve real things in the financial system rather than just getting excited about drugs marketplaces and that sort of thing. So I see a really good future for it. It's not going to happen quickly. It's going to take a few years before there are any serious applications being used widely, but we're heading in the right direction.
I mean, it's still early days. I'm not one of these people who stands on stage and says Bitcoin's going to, replace or disintermediate all existing payment types or the financial system. I mean, it's for me, coming at it from just specifically where our business is focused, which is in retail payments. I think Bitcoin deserves a place within the payments portfolio for many different types of merchants, but not all merchants, depending on their requirements, who they're selling to, what they're selling, and their existing payments mix. I think as a company, we're not really focused on re-engineering or looking at the kind of core blockchain. I guess what we're looking at is how we can build, applications that service retailers to help them get what they require from a payments experience using Bitcoin underneath. So we're focused more on how do we make refund processing possible? How do we make how do we get around the 10-minute confirmation time by giving retailers assurances that they're going to get a payment, taking the risk on that, and how do we kind of put those mechanisms in place? So for us, it's about building applications that I guess in a way make it transparent to the merchant that they're using Bitcoin by taking away some of the nuances of Bitcoin, such as the confirmation time and some of the challenges with how you get a refund done. So, as I say, still early days. It'll be interesting to see how the underlying blockchain technology develops. But what we're focused on very much is I guess abstracting away the complexity of that for people who want to accept payments in Bitcoin.
What Bitcoin does for financial institutions, a blockchain does for everything else, in the sense that a blockchain puts a group of people back in control over their data. So they don't need to share it with anybody else. They don't need to rely on anybody else. They don't need to depend on anybody else. They don't need to be observed by anybody else, and they can run it themselves. So that's where this is going. I don't think they're mutually exclusive propositions. I think, in fact, they're complementary. Bitcoin is the most potent proof of a blockchain's efficacy in any other application. And our view is that we're going to see these things everywhere, and we're going to live in a better and freer world as a result of it.
Right.
Yeah, piggybacking on what Preston just said, I've been in the space for a few years now, and I remember pitching Bitcoin back in 2012. And pitching VCs in the space in 2012, you would get laughed at. They're like, "You got to get a job. Like, what are you doing?" Coming to these events over time and talking to smarter and smarter people in the space, it's really incredible to me that we're in 2015 and over half the room owns Bitcoin. That's actually an amazing feat. And I think the compounded resources over time, this is a space that's 6 years old, but kind of projecting out 10, 20 years, I think it could be as big as the internet, which is pretty incredible.
So when I look at 2015, kind of on the Bitcoin timeline, to me it reminds me of 2012, right? 2012 was a very quiet year. The price didn't do much. It kind of just hung around about $7 at the time. I didn't get enough back then, sadly. That's why I'm here and not in Tahiti. Just hung around, and it didn't do much for all of 2012. There wasn't a lot of hype. A lot of the hype was in 2011 about Silk Road this and crazy thing that. 2013 also had that. But 2012 didn't. But what I saw in 2012 was a lot of people like Avish going around building stuff, talking about stuff, evangelizing. There's a lot of quiet building that happened kind of away from the noise. And this year feels a lot like that to me too. And I think it's setting the stage for a very vibrant and dynamic 2016. And whether it's Bitcoin, blockchains, whatever chains.
Ideally both.
Put a chain on it, I think it's setting the stage for a very interesting and high growth 2016. So thank you, Stan, for having us, and I hope this was enjoyable. Great. Thanks, you panelists.